Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far. Today, we're going to be putting out a bit of an earlier video. We're going to be giving a daily cryptocurrency market overview. We are going to be crossing over into the realms of the traditional financial world. And the reason that we do this and we're going to make these updates more frequent is because we live in very strange and uncertain times, and we're going to kind of perhaps through doing these updates, give some explanation to what's going on, certainly with our market that has become increasingly more correlated with the traditional financial world, which of course is correlated with global events. We know that we've got the new variant, and that's caused, certainly in the traditional markets, which has echoed over into our markets, a bit of a slam down for things like oil, the FTSE. S&P hasn't actually opened yet. I'm expecting them to follow the FTSE 100 and oil. The dollar's seeing a little bit of strength. There's lots going on. So what we're going to do in this video, guys, we're going to take a look at the market as a whole. We're seeing a little bit of an uptick. This, again, correlated with your traditional markets. Bitcoin is still seeing a little bit of indecision, but I'm expecting Bitcoin to follow the FTSE and oil to the upside. And, of course, yesterday, Jerome Powell, Janet Yellen, and a number of other government officials spoke in relation to monetary policy, inflation, and all the things that come with it. And that's what we're going to spend a little bit of time talking about in this video, because as crypto investors, if you want to be successful and really get to grips with what's going on, you need to pay attention to the traditional financial world, because we are now tethered to it, given the nature of our market cap and given the fact that we have traditional financial players now within the crypto space. We covered Goldman Sachs, JP Morgan, and how they're all GBTC holders, and et cetera, et cetera. So that's where we're going to start. We're going to take a look, traditional markets. We'll do a quick check. Oil seen an uptick. We have had a bit of a slam down, and this could just be somewhat of a relief rally. Before we see continuation, we've seen it on the FTSE 100. This is all correlated with the new variant, news that perhaps it's not as malicious as it was initially thought out to be. But markets are very uncertain at the moment, very correlated with global events, and it's something you certainly need to pay attention to. I'm waiting for the S&P to open. I think we're 3 or 4 hours away from that. I think it's about 9:30 they open in the UK. 9:30 they open Eastern time. So we're a few hours away from that. The dollar's seeing indecision again. I do expect the dollar to see some sort of a macro continuation pattern to the upside, and this is really in relation to them being paired against other FX markets, other foreign currencies, and how they're going to start bleeding them, and we're going to see dollar strength in relation to them. So the main comments that I want to talk about, and then we're going to go back to Bitcoin and everything. I'm not worried about Bitcoin, by the way, guys, and I do expect it to continue with the rest of the market. Ethereum's doing quite well today. Cardano's somewhat lackluster. You guys know I'm a huge bull on Cardano. I think this is a company, a kindred, or it's a kindred to investing in one of the early .com stocks and some of the companies to come out of that, such as Amazon. I think these technologies are going to be here for a very, very long time. I do see a lot of similarities between what took place back then in the 1990s and what's taking place today with blockchain. So what I really want to do is talk about some of the comments made by Jerome Powell. This is one article. It says the Fed chairman Jerome Powell warns Congress that inflation may keep rising next year. It's a bit of a no-brainer. Lots of people, and certainly he's sort of dropped the phrase. Fed's Powell floats dropping transitionary label for inflation. It's certainly not transitionary. We all know this. Lots of people think that the Federal Reserve and people like Jerome Powell are just stupid and they haven't quite realized this. It's not that. Markets are very manipulated and rigged in the favor of the people that make them. And when you understand this, one of the worst mistakes you can make is to underestimate your opponent. And this is what they want you guys to largely think. They want you to think that they're stupid, they don't really know what they're doing, when in actual fact they know exactly what they're doing. And I'm going to save that for another video where I talk about economics and how it's really been used as a weapon, if you will, to kind of keep people in the classes that the guys at the top deem them to be in. But, inflation is not transitory. It's been going on for absolutely years. It's been hiked up. I think yesterday in the talks, they actually spoke about how inflation was the highest it's been for 31 years. This, of course, is due to the global events that we've been through. Certainly, we saw markets take a huge tumble on March 2020 and how they've had to kind of prop things up with printing money. Now, one reason, it's kind of strange that we are seeing an uptick within some of these markets. I mean, they all have their own kind of features and variables that will drive them, but they are all correlated to inflation. They are all correlated to with interest rates, etc., etc. And some of the things that Jerome had spoke about is Powell says Fed may accelerate pullback in economic support. And this what they're essentially talking about here is that he's considering essentially tapering off interest rates, or not tapering off interest rate, raising interest rates and maybe causing a bit of deflation and stopping all the printing, or certainly reining it back. Now, they're in a very, very tough situation. We'll go on to some of the crypto-related articles in relation to this. They're in a, or I'll just show you very quickly. This is an article that says, First Mover, Asia, Bitcoin rally stalls after US central bank chair comments and Ether rises. And I'll find the comment. A faster Fed taper and increased interest rate hike expectations was bad news for Bitcoin. It's bad news for markets as a whole, because if they increase interest rates, money becomes more expensive to borrow, more expensive to use, and there's less sort of stock buying and market buying going on as a result of this. It has a negative effect also on the housing market, etc., etc. I'm not sure if they do raise interest rates, which it seems like they're going to have to. They're in a very, very tough situation, certainly with this new variant. Because if we see anything like March 2020 and we see a real scare take place, the markets will take a downturn, and the only way they can really combat this is with more printing. And if they upped interest rates at the same time, it would really cause a huge downturn. The only reason we recovered as well as we did, and markets as a whole, guys, let's take a look where we are. This, of course, is your March 2020 for oil. It's not the best chart. FTSE shows it a little bit better. This is one of the smaller FTSE charts. I don't even think we've got March 2020 on here. Let me quickly use another chart, ladies and gents. You can see March 2020 here for the FTSE. Obviously, we saw it in crypto. The only reason we recovered in the way that we did, and it's why Bitcoin's seen such a astounding run, is because they essentially inflated the monetary supply, thus devaluing dollars to prop everything up and kind of pump money into the system. So if they were to raise interest rates and we see any kind of a repeat of what happened in March 2020, that would be devastating for the economy, and they can't be seen to do that. And what these chairmans, what these kind of people in power tend to do is kick the can down the road. So it's lots of ifs, buts, maybes at the moment. It does look like they are going to have to certainly taper off the amount of money printing. It's unsustainable, complete and utterly unsustainable. And it's really showing the highlights, the failures in the dollar, in the fiat currency systems in doing this. So they are going to have to sort of rein it in, but to what degree? Inflation absolutely isn't transitory. It's a tax on the poorest people of society. It's a tax on everybody, but it certainly affects the poorest people as they don't own assets that typically hedge this. So markets are very, very unstable at the moment. There's so much going on, and that's why we're going to do these daily updates to keep you kind of updated on everything that's taking place. But ultimately, guys, I still think we're in a bull run for Bitcoin. Bitcoin stocks and commodities correct after Fed chairman mentions policy changes. So this was initial, but then we're seeing kind of a bit of a bounce back, if you will, certainly with oil, which has got absolutely destroyed recently, guys, and with the FTSE. These markets are now exceptionally correlated with the markets that we're in. I'm waiting to see what the S&P does, as this is going to more directly show what took place yesterday. The dollar's in a bit of indecision. Bitcoin's also in indecision. Isn't that interesting? But ultimately, I think with Bitcoin, one reason I'm so, or one reason I'm expecting continuation is not only today do I expect that, because we've seen that kind of uptick in the traditional world, but we have repeated this. We've been here before for Bitcoin, and we're doing the same thing, getting sort of stuck between the 0.5 and the 0.382. We did that previously, and we still continue. I think crypto is still a bull run. It's just a different bull run due to everything that's taken place. So that's largely what I have for you in this video. I think Ethereum, we're seeing, as markets start to wake up, we'll see how the day progresses. I may update you later if that's something you guys would like to see. Certainly let me know in the comments. But I am going to be doing these updates daily for the reason that it's such uncertain times. We need to pay attention to everything, not just the crypto space. We're not in our own little bubble that's determines bear and bull markets based on a halvening anymore. There is going to be an element of that every 4 years, but we're also very susceptible now to global finance, global events, and we're seeing that. We've seen that time and time again, and if you don't pay attention to those, you're going to get caught short. So we'll see what happens, guys. Ultimately, I'm expecting today for the markets to kind of continue to trend upwards. Depending, watch the S&P when this opens. That'll be very interesting. Keep an eye on the dollar. Keep an eye on all of these. If we start to see another slam down, for me, this is somewhat of a weak rally, considering just how hard the slam down was, certainly on the FTSE and crude oil. But what I'd like to see is a kind of recovery. The Fed, we're going to have to pay a lot of attention to that and what they're going to do. For example, if they came out and said interest rates were going to go up, it's very likely you see a downturn in markets full stop, or markets housing everything due to what I mentioned earlier about money becoming more expensive to use. So we'll see. Don't think that the Fed for 1 second are stupid. They may look it, but they aren't. And they wouldn't be where they are today if they were. There's some level of intelligence there, I can assure you, or certainly the people behind them are very intelligent, and it's all a big game. And what you need to do as investors now is to look at these guys and to kind of see if you can see the wood through the trees, and look and see what the inner workings are, and why perhaps look for reasons. Why may they do this? Why have they, what's going on behind the scenes, and that will kind of give you more answers than looking at and taking things at face value and kind of laughing at them. So we'll see what happens, guys. Let's hope for continuation. It is looking like we are going to just follow the traditional markets. They are seeing somewhat of a little bit of a pullback within these wicks. Let's drop the time frame. Looks like quite a nice W double bottom there, actually, to be fair. And if you come back, hold this, you could be in for some more continuation. So that's what I'm expecting across the board. Bit weird, because you'd expect the Federal Reserve saying that he's going to maybe up interest rates. He's going to stop the buybacks in relation to the bonds. Markets see a bit of a downturn. The bond one is very interesting because essentially they're buying debt. Now, that may have a positive effect on Bitcoin, certainly in relation to highlighting the flaws of the fiat system, but not in the terms of markets as a whole and people kind of selling in fear of losing further money. Anyway, I'm waffling on now, guys. I'm going to love and leave you on that note. If you've enjoyed this video, I like it, always appreciate it. So as a comment, if you want to join the Discord, there's a link in the description. And I look forward to seeing you each in the next YouTube video. Thank you very much for watching, guys.